July inflation landed exactly on consensus. The 30-year yield rose anyway.
And the money went somewhere very specific. CoreWeave up 19%. Lumentum up 14%. Bloom Energy up 12%. Coherent up 8%.
Constellation up 0.1%. AEP up 0.9. Centrus down 2.2.
Every one of those is the power trade. 12 points between the two halves in a single session.
Yesterday, we said the power rotation had no volume behind it. Today, the volume arrived in the equipment half and not in generation.
We are not calling that a new regime on one session, but it is the cleanest version yet of a distinction we have been drawing for a while, and today, it got paid. Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research.
S&P up 0.25% at 772.49. Nasdaq 100 up 0.7. Semis up 2.08. Software down 0.8.
10-year down about 3 basis points to roughly 4.65. 30-year up 1 to 5.26.
And volume never showed up for the market as a whole. S&P at 74% of its 30-session median. Nasdaq 76. Second straight session under 3/4 of normal.
Which is worth being precise about. There was real buying in a handful of names. There was no broad risk on, and there was no risk off anywhere.
So this was a rotation. Money moved between places, not into or out of the market.
Now, why a number that matched consensus mattered at all?
At the July meeting, Chair Warsh removed forward guidance from the statement. He told markets to price off the data rather than off the Fed's projections.
So the data is the guidance now. That is what turns an inline CPI into a real event instead of a non-event.
Headline up 0.1 on the month, 3.4 on the year. Core up 0.2, 2.5 on the year. Both annual rates 0.1 below June.
And underneath, core went from 0.0% in June to 0.2 in July. The annual rate fell while the monthly run rate doubled.
Shelter rose only 0.1, slowest since early 2021. But lodging away from home fell 2.8% and did much of that work. Owner's equivalent rent, the bigger and stickier line, rose 0.3.
Used cars up 0.4. Airfares up 2.2. Energy down 1.5. Gasoline down 2.9.
September hike odds fell to roughly 40%. No cut is priced.
Short rates eased. The 30-year rose anyway to 5.26. Second straight session where the long end has ignored good news about the Fed path.
That is its highest level since 2007.
The reading we hold is that the long end is doing the tightening the Fed is not doing. No guidance plus inline data keeps the Fed passive, and a passive Fed leaves the bond market to set financial conditions. Warsh has not said that.
The level we watch is a close above 530. We are 4 basis points under it.
And tomorrow, $25 billion of 30-year paper comes to auction. For long rates, that is a bigger test than today's CPI was. Watch the bid to cover.
The split. Equipment and enablers. CoreWeave up 19.3. Lumentum up 13.6. Bloom Energy up 12.3. Coherent up 8.2. Oracle up 5.4.
Generation, Vistra up 1.2. AEP up 0.9. NRG up 0.7. Constellation up 0.1. Centrus down 2.2.
About 12 points between the two group averages. One session, one theme.
And the news explains it. Every winner there had something to do with getting power built or getting data moved. None of it was about the price of electricity.
Here's the part one did not expect. Against 30-session medians, CoreWeave traded 350% of normal. Lumentum 279. Coherent 204. Oracle 120.
Generation, Constellation 88%. NRG 77. Vistra 62. AEP 55. Centrus 44.
So generation did not merely lag on price. It traded below its own average on the day its own theme led the market.
In a tape running at 74%, someone put size into equipment and nobody turned up for the generators.
Price can drift on nothing. 3.5 times median volume is a decision. Trigger was Nabius. The AI cloud company picked Bloom Energy's fuel cells for its flagship site. 300 megawatts at Vineland, New Jersey, with up to 328 megawatts expected live this year.
The partnership dates to May, a 10-year, $2.6 billion master agreement. What landed today was the money and the site. $1.7 billion of project investment from Oaktree and industrial development funding, with Morgan Stanley on tax equity and MUFG on senior debt.
And the mechanism matters more than the money. Those fuel cells replace combustion generation that was already planned, and they come online sooner because they clear permitting sooner.
Nibius did not buy electricity. It bought the date the electricity arrives.
Its revenue was up about 454%. That is not a company that can wait in an interconnection queue. CoreWeave, revenue $2.575 billion, up 112%. An adjusted loss of $1.03 a share against an expected $1.20. Backlog about $104 billion, up from roughly $25 billion a year ago.
GAAP net loss $626 million, widened from $290.
Walk it down, because the shape is the story. Adjusted EBITDA margin around 59%. Adjusted operating margin around 5%. That distance is depreciation.
From operating income down to the net loss, the distance is interest. $640 million in the quarter against $35 billion of debt.
Guidance went up to $12.4 to $13.2 billion for the year.
The market bought the backlog, up 19% on 3.5 times volume.
Which brings up the argument that has followed this whole sector. The claim is that AI clouds depreciate their chips too slowly, 5 years, when the real life is 2 or 3, and that this flatters reported profit.
Michael Burry put money behind exactly that. He shorted Nibius at around $212, and Oracle as well, on that thesis. He described shorting Nibius as shooting fish in a barrel.
Since then, Nibius reported revenue up 454% and rose 34% in a day. Oracle closed up 5.4 today.
And on its call, CoreWeave said it has booked 2020-era A100s through 2029 at full price, a 9-year commercial life on a chip depreciated over 4 to 6.
The fish, it turns out, were armed.
Although a week of price action does not settle an accounting question, if those chips are still earning full rates in 2029, he is wrong. If utilization or pricing cracks first, the depreciation schedule is exactly where it shows up. Today is one data point, not a verdict. 2 facts that cut against today's story. Bloom rose 12.3% on 96% of its median volume.
So, the biggest mover in that neighborhood went up on an upgrade and a headline, not on accumulation. JP Morgan raised its target to $346. Bloom's own quarter was back on July 28th.
And Centrus fell 2.2% on 44% of median. Uranium fuel sits on the same bottleneck list, and it went down while its neighbors went up.
So, this is not one trade with one direction. It is a list of separate bottlenecks that happen to share a theme. What we actually take from today. The layer you own inside a theme mattered more than the theme did.
Decide the layer before the name. That is the lesson. And today, it was a cheap one to learn.
Whether equipment and generation are now 2 different trades, one session does not answer.
What would answer it is repetition. If equipment keeps taking the volume while generation keeps trading below its own average, that is a split. If generation catches a bid on the next piece of good news, today was a one-day dispersion.
Elsewhere, Intel completed a common stock offering of about $20 billion, expanded from 15, dilutive, and it puts cash on a balance sheet that needed it. Intel closed up 3.3%.
Diesel. The Jazan refinery fire plus strikes on Russian refining put ultra-low sulfur diesel up 7.4% on Monday and European diesel margins up 10%. A refining shock, not a loss of crude production.
But diesel is a freight input, and July's CPI cannot see August's diesel. Tankers firmed with it. Nordic American up 4.4%. Hormuz is still closed.
Tomorrow brings PPI, the $25 billion 30-year auction, and Coherent's results, which it enters already up 8.2%.
The auction is the one that matters. 530 on the 30-year is the line, and we are 4 basis points away from it. That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.